Hi and welcome back to my channel. In today's video I'm going to do another eToro for beginners video and talk about what are CFDs. You'll often hear people say that CFDs are dangerous, and yes they can be, but it's not as clear cut as that, and it's the way they are used that could make them inherently more dangerous. If it's your first time watching my channel, then my name's Ollie and I've been an IT consultant developing software solutions for the finance industry since 2008, and I've been actively investing in the stock market since 2016. If you enjoyed this video, then I'd really appreciate an early thumbs up, as it really helps with the YouTube algorithm so that my content can reach more people. Also, please subscribe and press the bell icon to be notified of the latest videos, as I upload new content every week on personal finance, investing and how to reach financial freedom. Please note the information in this video is not intended to be investment advice, and if you want investment advice, you should seek a licensed professional. Also, past performance is not indicative of any future results. If you're not already signed up to eToro and decide to sign up while watching this video, then I have an affiliate link down below this video, which if you sign up using it, then I will get a kickback, and it doesn't cost you anything extra, but it really helps support this channel. So if you're new to eToro, then you may have noticed this big warning up at the top here that says CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 67% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Now, this number changes over time, but it indicates that CFDs definitely come with risk. So what is a CFD? If you look at this page here, you will see that CFD stands for contract for difference. CFD trading is a method that enables individuals to trade and invest in an asset by engaging in a contract between themselves and a broker, instead of acquiring the asset directly. The trader and the broker agree between themselves to replicate market conditions and settle the difference between themselves when the position closes. So basically, it means eToro allows you to open a trade on an asset even though they didn't sell you the real asset, and they will settle up the trade as if they did sell you the real asset. Basically, it means they can offer you more assets even though they don't have access to the real underlying asset. Yes, I said asset a lot of times on that, but hopefully you get the gist. So on eToro, the following assets will be CFDs when opening a trade in currencies, commodities, indices, and possibly some cryptos depending on the country you're in. You can easily tell whether a trade you're opening is a CFD or not by going to place the trade and pressing that button there. Then when this screen loads, it will say CFD trade here. Now, if you were opening a trade in a real asset, so if we go to a stock, let's just go to Tesla, it will say you are buying the underlying asset. So you can tell here that this is not a CFD trade. So CFDs themselves are not overly dangerous if you open a 1x buy position. It would almost be the same as holding the real asset, where obviously the normal risks that come with trading would be involved. But the main difference for a 1x buy trade of a CFD would be the spreads and the overnight fees. So all trades on eToro involve spread fees, and while this isn't inherently dangerous, it's worth bearing in mind that the spreads are set based on the asset type on eToro. So as you can see on this eToro help page here, there are different spreads based on the different assets. Now, it's worth taking a look over this page when you get a moment, and also there is a nice PDF giving worked examples, which I won't go into here as there's too many and I don't want you falling asleep. But this will help you to understand the different spread fees that are involved for different asset types. But go check this out when you've got a moment, and I'll put the link to this in the description below. So spreads are unavoidable, but like I said, they don't make CFDs dangerous, but fees will add up over time. So you should be mindful of this. So one thing that is slightly more dangerous with CFDs and is different to buying a 1x stock position where you own the underlying asset, and that is the overnight fees on CFDs. So CFDs on eToro will charge you an overnight or a weekend fee, which can add up over time and start eating away at your balance. You can see the overnight and weekend fees down at the bottom here. So for this indices, so the overnight fee depends on the amount you're putting in, but if I was to put $1,000 on the UK 100, it would be a daily fee of 8 cents, and a weekend is roughly 3 times that of 25 cents. And the weekend fee is the same as the overnight fee generally, but charged for Friday, Saturday and Sunday. Obviously there must be some rounding involved in this, and that's why it's rounded up to 25 cents. So again, you should be mindful of these when opening a CFD position. Now, there were two types of transactions that will open CFD positions that I didn't mention before, but these are what make CFDs more dangerous on eToro. And that is leverage and shorting. So let's start with shorting. If you don't know what shorting is, then I do a whole video on the subject, which you can check out up here, and I'll put the link in the description below. But as a brief overview, you are betting on the price of an asset going down, which you may think is a cool way to make money. Yes and no. Basically, when the price of the asset goes down, you make money. But if the price of the asset goes against you and instead starts going up, well, the price can increase infinitely, and so wiping out the balance of your entire trade. Luckily, at the time of recording this video, eToro should close out your position when you reach zero. But I recommend you to check this because this could change at any point after this video. With other brokers, if it was a real short trade, you would be in debt to the broker. So bear this in mind when using other brokers, and always do your own research. So the next thing that makes CFDs dangerous is leverage. If you don't know what leverage is, then I have a video going into detail on the subject, which you can check out up here, and I'll put the link in the description below. But basically, you're borrowing money from eToro to increase your exposure to the market. If we look at this site here, you can see that the best way to understand leverage is through an example of how it affects your profit or loss potential. If you trade with no leverage at all and invest $1,000, for every 1% move in the market, you can gain or lose 10%, which equals 1% of $1,000. In comparison, if you were to invest the same $1,000 and trade using times 10 leverage, the dollar value of your position would be equal to $10,000. 1% of $10,000 equals $100. So for every 1% move in the market, you can gain or lose $100. So basically, if the market moved 10% against you, your entire position would be wiped out. On a bad day or on some hype stocks, 10% is really not unheard of. Now, if we look here, eToro does say that it has negative balance protection, which on rare occasions in which market conditions cause your equity to go negative, eToro will absorb the loss and reset your equity to zero. But if we're using our above example, you still would have lost your initial capital, which is not cool because you're $1,000 down. Also bear in mind, this could change at any point, so always do your own research on this. Other brokers, you would potentially end up owing them money, so it's worth bearing this in mind. This is quite a good feature on eToro. Now, over and above this, because eToro has lent you money and they are giving you greater exposure to the market, they take a higher interest payment on the overnight fees, which you can see change when I flick between the different leverage multipliers. So at the moment I'm on 1 times and it's 8 cents. If I put that onto 2 times, it's 17 cents there and 51 cents for the weekend. Times 5 is now 42 and $1.27. Times 10 is 85 and for the daily, and $2.54 for the weekend. And we'll just jump to 100. Well, you need to enable that to go to the higher leverage settings, which I've not done. But times 20, the overnight fees for the daily is $1.69 and weekend is $5.08. So why would a broker offer CFDs? There is many possibilities as to why, and this list isn't extensive, but probably the main one is that it gives them flexibility to offer more assets from all over the world markets. In addition to this, they can offer instant order execution because there is no real buying and selling of assets. Also, the ability to offer shorting, or as eToro calls it, sell trades. Also, it allows brokers to offer leverage, which can mean greater returns for the investor, but also greater risk, and so can magnify losses. In addition to CFDs being dangerous, there are also some disadvantages. The CFD industry is not highly regulated, and at the time of recording, CFDs are not allowed in the US. It's also worth bearing in mind that while eToro doesn't currently do this, that investors that hold a losing position at other brokers can get a margin call requiring the deposit of additional funds. Also, if an underlying asset experiences major volatility or price fluctuations, the spread on the bid and ask prices can be significant on CFDs. Paying a large spread can prevent profiting from small moves in CFDs, decreasing the number of winning trades while increasing losses. In conclusion, as mentioned earlier, I don't use leverage and I never really short, especially after the GME and AMC saga. If you don't know about that, then go check out my last video on meme stocks, which I'll put a link to up here and in the description below. But as a long-term investor, I personally tend to avoid CFDs in general just because of the fees, as I rarely open and close trades within a day. So I hope you enjoyed this video and found this video informative, and I hope you now have a better understanding of CFDs. As always, please do your own research, as any of this could change after the point of recording. If you've got any questions on this video, then please let us know in the comments. Do you trade with leverage or short? And if so, what's the most amount of leverage you use? Or what stocks are you currently shorting? I'd love to know, and I read all your comments. If you found this video helpful in any way, then please give me a thumbs up, as it really helps the channel. Also, for those of you interested in signing up to eToro and haven't already, then there's an affiliate link down below where if you do sign up using it, then I will get a kickback, and it doesn't cost you anything extra, but it really helps support this channel. So why not give eToro a go before depositing any real money, as they will give you a demo account with $100,000 of virtual money where you can experience all of the features like copy trading without losing any real money. Also, if you want to learn more about how eToro works or more about personal finance or investing, I have numerous videos on my channel, so I recommend you go check them out. So please subscribe and press the bell icon so you don't miss out on any future updates. It's been Ollie from Get Geek Finance. Thanks for watching, and I'll catch you in the next one.